Let's welcome our experts on board then and analyze whether or not there's further weakness in store or are we in for a near-term bounce. Avinash Gurakshekhar as well as Ashwini Gujral join in on the technicals. Ashwini, start off with you first. Would it be fair to assume that perhaps in the near term we are in for some more days of rebound? Is there a bottom in place, or do you think Monday morning in the markets would be back to weakness?
Well, given that we've fallen 10%, you'll have a rebound, but it won't feel like one because the markets will remain choppy on a broad basis. Once we are done with the pullback, you may be up hardly, 100, 120 points. So I don't think it'll be a very roaring type of a pullback. Probably the best gains may already be in the bag. So chances are that you'll see a flat to up kind of a market for the next probably even a week. And then we resume our downside. So we've done 10% in a fairly short period of time, and now some sideways moves, and then I think another 8 to 10% should be on the table.
Avinash, the interesting pattern this week was that it was the stocks which have been seeing a run-up, the likes of an FMCG, healthcare, of course, which reacted to individual earnings. They saw some bit of profit-taking, but on the flip side, you had real estate as well as metals which bounced back. Do you think this is a pattern which is here to stay, or is it just a technical aberration?
I think it looks like to be a technical aberration, because I think clearly if you look at real estate and metals, I think fundamentally these sectors still continue to be under severe stress, and the way the rupee has behaved and with the kind of policy headwinds we are likely to see over the next couple of months, my guess is I think rate cuts are not going to come in, and globally metal prices are under pressure. So I would say that I think clearly what you saw on the FMCG or maybe on the health side or pharmaceutical side, some sort of selling pressure probably was normal profit booking, but on the high beta sectors which have even shown a bounce today, I think it would be difficult for this rally to get sustained. Maybe another 100 odd points, but beyond that I think you could see selling pressure. So I think clearly it's going to be a volatile market. Next week we are going to see a lot of good, important macro numbers coming in, like IIP data, WPI numbers. So that also possibly could put a break to the kind of momentum we have seen today.
Ashwini, how does one approach names like Lupin as well as Ranbaxy now?
See, I hope Ranbaxy has made a bottom, but for that, it'll have to get past its 200-day moving average, which is around 420. So chances are that Ranbaxy will give you pullbacks, and if those pullbacks end above these recent lows, then some kind of an uptrend will start. But I think it's still fairly a distance away from making a long-term bottom. Such long-term bottoms have been forecast earlier as well, but only for the stock to go through them again. So I don't think people should be in a hurry to just get into Ranbaxy and it won't stop and keep going up 30% a day. I don't think that ever happens. I think it's important to see what the stock does from here and whether it's able to make higher highs over a period of time.
Avinash, what is it that you like or dislike from the pharma pack?
I think clearly, I think in terms of the performance, I think Lupin has been a little disappointment. I think clearly, although the broad picture for Lupin definitely looks good, but I think clearly margin pressure and I think the quality of earnings this time seems to be a little disappointing. So I think I would avoid Lupin. And on the Ranbaxy stock, I would say that the risk appetite, if it is high, I think this is a stock which has been ignored by the markets for the last 6 months, has underperformed. So I think if they continue the good show, especially on the EBITDA front, and positively surprise the markets at these levels, definitely I think the downside looks to be capped. So I would prefer a Ranbaxy, more from a kind of a short-term and a medium-term perspective, and clearly avoid Lupin.
Ashwini, what is it that you're liking from the mid-cap end of the market? Couple of stocks which reacted positively to their earnings. You had Bharat Forge, Tilak Nagar Industries, or for that matter, Welspun India as well, which looked good.
Well, this is no market to try to go bottom fishing in some mid-cap stocks, even if they have done well this week. See, the overall trend of the market remains down, and sometimes, stocks perform well on some news flow only to come down later on. I think the market needs to bottom out before you go on any kind of large scale shopping. For the moment, on declines, not on mid caps, you would like to get into maybe the tech stocks because they're the only ones which have a sustainable tailwind of the rupee with them.
Avinash, stay away from the PSU banking pack. More pain in store.
Yeah, I think clearly, the numbers from SBI would be reflective of the fact that PSU banks' asset quality would continue to be under significant pressure. More specifically about SBI, I think clearly the absolute profit number would not be important, but the kind of management commentary on the kind of growth outlook the bank sees in the next couple of quarters, because the rate cut hopes have completely diminished, and with the kind of asset stress SBI already has, my guess is any further deterioration in the restructured assets or maybe in the asset quality book would clearly be seen as a big disappointment, and one could see a big kind of jerk and maybe a drop on the stock once the results are out next week.
Ashwini, what about your trading calls?
See, United Phosphorus, that's a buy with a stop of 133, target of 145. Biocon is a buy with a stop of 322, target of 342. And SBI is a sell with a stop of 1700, target of 1650.
Avinash, is there any stock idea that you would want to recommend to our viewers from a medium to long-term approach?
I think, Aisha, from the pharmaceutical pack, I think we like Torrent Pharma. Torrent Pharma has consistently, managed EBITDA margins of close to 16-17%, and it is a big beneficiary of the rupee depreciation. So clearly, I think my guess is I think one should play on the rupee theme, because there are going to be stocks which are going to be impacted positively because we don't see the kind of appreciation happening in the rupee front. So clearly, at the levels of around 450, this is a good tier to pharmaceutical company with good amount of exposure from the FIs and institutional interest. So one could see a good bump up of something like around 14-15% over the next 6 to 12 months.